Welcome to the Trusted Bridge Capital monthly video series entitled Asking for a Friend. I'm your host, Eric Jefferson, and for this month, we tackle a very timely question, one that's come in from a number of investors in light of the recent all-time high made by the S&P 500 January 25th of this year. As the old adage goes, buy low, sell high. That has triggered many folks to reach out wondering if now is potentially the opportune time to divest some of those equity holdings. To answer that question, I'm going to first go through, offer some context when we think about the S&P 500 over longer periods of time. Now, before we get started, have a few quick words from our legal team. With that, we can go ahead, dive right in. To answer the question, I want to first offer some historical context thinking about the stock market. You can see going back to about 2013, we have the graph there. Has experienced a handful of ups and downs, but obviously that trend over the long term is upward sloping. Again, it's important to keep in mind that the index level does not revert back to some figure or long-term average. Rather, the S&P 500 index represents the growth expectations for the U.S. economy and that of the globe. So if one holds the belief that conditions will continue to improve, that businesses will continue to innovate and prosper, it makes sense that markets would be trending upwards over extended time periods. And as you can see on this side, since 2000, almost a quarter century back, the average turn for the S&P in a given year, just around 8.5%. However, the one trend you will notice, when there were sustained periods of lower returns, those are often followed by periods of then strong returns and vice versa. However, looking at the far right-hand column, you'll see that same logic doesn't necessarily apply to the S&P 500 price level. If you do look at the average, that at 2,100 and change, roughly half where we are today. Secondly, it's essential to also recognize that the market trading at or near all-time highs is not a rare occurrence by any stretch. Since the inception of the index in 1957, the S&P has registered 1,176 new all-time highs. That's equivalent to approximately 1 every 2 weeks or 14.3 trading days. Further analysis reveals over that same time period, roughly 1 out of every 5 days, or 19% of trading days, the S&P 500 was at or within 1% of its most recent high. Now, make no mistake, there are certainly instances. 2022 was a great example. We're selling at the January 3rd all-time high, would have then shielded investors from the subsequent double-digit declines that followed. However, that same approach would have caused investors to miss out on a roughly 25% gain the year before, another 10 to 15% gain in the aftermath of COVID. Now, obviously, sharp declines do serve as a very painful reminder of the stock market's inherent volatility. However, as we discussed, overall trend for stocks is one that consistently has been of growth. On average, S&P trading north of 8% in a given year. And so while that figure can fluctuate at any given time, ultimately it's investors that are able to exert patience and invest with a long-term perspective that are ultimately rewarded, as opposed to those looking for timely ways to enter and exit the market, which we all know is a very difficult task to accomplish. So with that, I want to thank everyone for your time today. As always, please don't hesitate to submit future questions. We have our contact email listed there. Thanks again for the time. Take care.